Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Take a look at some of the stocks on the move. Today, I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at today?
Yeah, diving a bit deeper on EchoStar, ticker SATS. Stock right now only up about 1%, had jumped more than 5%, but this coming after a Bloomberg News report that the company is in talks to sell spectrum, some of its wireless spectrum, to Verizon Communications. So this comes after deals with AT&T and SpaceX for some of those licenses. Bloomberg reporting that it probably wouldn't be the case for this Verizon deal to carry the value of some of those deals, north of billions of dollars. But we are certainly seeing a rally this morning in shares of EchoStar. This is a company, guys, that has been trying to work its way out and stave off bankruptcy and dealing with some of the pushback from U.S. regulators. So kind of reworking its business, reworking its opportunities in terms of turning those contracts and some of that spectrum into actual cash in their pockets. Stock year to date up more than 225%. So outperforming those mid-cap
We've been waiting
indexes.
a decade for this performance. Literally, we've been sitting there for 12 years. Charlie Ergen investors, like I, have always been a Charlie Ergen backer. He bought the spectrum like 13, 14 years ago, and either you're going to build its wireless network, what this country doesn't need, or you're going to sell the spectrum, which is always valuable, to somebody else.
But he waited a long time.
He waited forever. So my IRR is like, I don't know. But it was just finally, shareholders and bondholders are going to, I think, get paid.
Yeah, trading at about $75 a pop, was at 50 back in 2017. Just don't look back towards 2008, 2009 if you've been holding on for the long
This is the
run.
old Dish satellite TV company. Okay. Just I vented there because it was a decade.
No, you should vent after waiting this long. Let's talk about CRH, which is a building materials company, and those shares are up almost 5%.
Yeah, rallying this morning. This is a company that is listed in London, but had pivoted its primary listing to here in the U.S. This comes after the supply makers, so cement, think of things like that, laying out midterm targets for revenue and growth, EBITDA margins into 2030. So they see this year their adjusted EBITDA between $7.5 billion and $7.7 billion. That's midpoints just above what Wall Street was looking for. But when you look at the first blush reaction from analysts, really talking up the fact that they're laying out financial targets 4 or 5 years into the future, averaging an annual revenue between 7 and 9%. So a slow growing business, a buildings material business that has really rallied pretty tremendously since that April bottom on the year, returning about 30%. So a big winner for the company. Again, it also has done tremendously well since it pivoted its primary listing to here in the U.S., but with all the talk about the need for spending not only on infrastructure in the U.S., but around the world, really playing out for that company. And this comes ahead of a capital markets day hosted by the company today here in New York.
Building products,
boring companies, sure, rallying this morning, but one company that maybe a bit more fun to talk about is Spotify, ticker SPOT, down about 5% today. That's the biggest drop for the company since July 29th, this coming after its CEO, Daniel Ek, planning to step aside after almost 2 decades leading the company. They said that their chief product and technology officer, chief business officer are going to take the reins jointly effective January 1st. So this is a big move for a company that was co-founded by Ek back in 2006, guys. I think if you're 42 and stepping away from being CEO of a company, not a bad move. I'm not quite there. Maybe someday soon, but the stock still year to date returning about 56%. So lapping the Russell 1000, which it would be comped against, which is up about 14%. So a big run for Spotify since he took the company public. But again, giving back some of those recent gains, down about 5%.
I kind of view it as kind of the Netflix of the audio business.
Yeah, a little bit of a utility, but as you mentioned, he's 42. So is he stepping away in quote marks, or is he really stepping away?
Yeah, in there, he's going to have kind of oversight and still work with the company, but handing over kind of the view, going to provide some support and some guidance. The interesting thing, I remember talking to someone who's been a Spotify bull for quite some time, and his kind of base case was, this is a company that can continue to hike prices as much as they want, and consumers are going to kind of shrug off if their streaming service goes from $13 to $16 to $18 a month. Just because
I don't know about shrugging off. Complain loudly while it's happening, but
Are you a Spotify user?
I am, and I've watched the prices go up steadily every year and complain about it.
Well, Rich Go, we've got him at $9.8 billion, 353rd ranked.
Again, 42 years old, Paul.
I know, fantastic. Great service. Great service. Good for him. Stepping away.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.